Hello, this is Kali. How are you? It is 6 o'clock. We have 9 registrants in right now. Let's hold off for about a minute and see if anybody else wants to show in. Oh, we have 2. Let's go for one more minute. Okay, that was the 6 o'clock alarm. We shall continue. Today we are working on our QuickBooks certification program, and we're going to go into chapters, the appendix miscellaneous topics in day 1, and we'll move into day 2, covering chapter 1 special topics. Chapter 2, setting up payroll. Day 1, appendix and miscellaneous topics. We will set up sales tax, invoice sales tax, pay sales tax, and manage inventory. Setting up sales tax helps us control and track our sales tax. We will set up sales tax preferences, set up sales tax items and groups, sales tax codes, and assign a sales tax code to an item. And we will also assign a sales tax item and sales tax code to a customer. All right, set a sales tax preference. A preference must be set if your company will be charging and paying sales tax. And the path is in your home page. Manage sales tax. Oh, by the way, I'm working in the sample company. The sample company has invoices with sales tax in them, some items in there already, and also it has the payroll services available. So if you'd like to switch over to that sample company, you would do that through the file and close the company that you're in and then open your sample company. Okay, back to sales tax preferences. We have the sales tax preference button here. And sales tax and your company preferences, and we will populate these areas in here. Okay. Sales tax items and groups. Sales tax items identify the rate and the tax agency for which you collect sales tax. There are 2 different types of items for sales tax purposes. Sales tax items used to calculate single taxes paid to a single tax agency. Sales tax groups are used to calculate 2 or more sales taxes grouped together and applied to the same sale. We have a city north of Albany, Saratoga Springs, and they require 2 sales taxes when you purchase an item there. One sales tax to the city of Saratoga Springs and also to the county of Saratoga. So using that would be a good example of using the group sales tax. Sales tax items and groups. To add a sales tax, we would click the Manage Sales Tax and Sales Tax Preference, add a sales tax item. And this window here, we would populate and add the item. To add a group, cancel, there we go. To add a group, we would choose a sales tax group, populate, and then use the item here. So for Saratoga City Group. Description, sales tax, and the item that we would use is this sales tax for Saratoga Springs at 3%, sales tax for Saratoga County sales tax as a total of 7%, and we'll choose OK. So now we have a group and a couple of items. Some states require more detailed reporting of non-taxable sales. Sales tax codes are used to classify why a transaction is either taxable or non-taxable. To add a sales tax code, we would go to the home page, the Manage Sales Tax, Open Sales Tax Code List, Sales Tax Code button, New, and Populate. Open Sales Tax Code List here. And here are our tax code lists. We have taxable sales, exempt, and non-taxable sales. Here we would add either a new one or edit a sales tax code. Here's our edit. And we would use the sales tax code, the description, whether it's taxable or non-taxable. Those will show up in your invoices and also track for your tax agency. To assign a sales tax code to indicate whether an item is taxable or non-taxable. To do that, what we would do is homepage, company setter, items and services, select the item, and then the item button, edit tax code drop down. Okay, let's take a look at that. Items and services. Let's choose an item, plans and permits. Oh, let me open this. Just choose one. I'm sorry, I don't have a full page coming here. There we go. Here's our item, and we can edit the item. And here's your tax code, right here. We would say it's either taxable, exempt, non-taxable sales. Churches are a good example of an exempt tax code. To assign sales tax item and code to the customer as we would say a church. We want to assign that sales code to indicate whether the customer is taxable or non-taxable. We assign sales tax items to indicate the customer's tax rate, and non-taxable customers are not charged sales tax even if they are purchasing a taxable item. As I said, non-for-profit organizations are a good example of tax-exempt customers. So let's find a customer. Edit and sales tax settings, tax code. Let's say he's, who is this? Hammy Shane is taxable. The tax item he lives in, or his business is in, we'll say Albany County, which is our default tax. And now he is set as taxable. Okay, pay sales tax report. Before you pay sales tax, you must determine the amount due. To review a sales tax revenue summary report to show you how much you owe, and review sales tax liability report that gives you a little bit more detail. So we want to go to the Vendor Center at Home page, to manage sales tax. Click it once. And here are reports. We have a sales tax revenue summary. A little bit to generate, and we have dates from 7/2018, from 9/30/2018. We have taxable sales of $78 out of 196,000, non-taxable 196,000. And we have a sales tax liability report. Taking a little bit to generate. Okay, we have total sales of 196,000, and tax collected at 624. Open that up a little bit. And we have sales tax payable of 409, and we'll see what this is right here. And you can do a quick zoom here on an item, and it will open it and let you know what that item represents. And this is a vendor tax credit, which we will go over. Okay, let's close these out. Okay, we need to pay our taxes. To make, let's make an adjustment on our taxes, and that adjustment is on our home page. And under Adjust Sales Tax Due button here, under Manage Sales Tax, and Adjust Sales Tax Due, excuse me. And populate and make sure you use your adjustment account. I had entered a sales tax expense account right here to ensure that this amount is accounted correctly. So that's how you would enter an adjustment for your sales tax. Now we want to pay the sales tax, which is very simple. Thank you, QuickBooks. And how we would do that is Manage Sales Tax and Pay Sales Tax button. Choose our sales tax. Here is the bill for $624, and then we also have a $215 credit, which is a vendor credit for paying on time. And we will choose that as well, and we have a $409 sales tax bill. Nice bill for this. To be printed, I don't want to print that, I would like to just enter it into the system. Okay, that will be sent to the our tax agency. Or you can print a check and send it manually, depending on what you have set up in your QuickBooks account. Okay, we're going to move on to managing inventory. QuickBooks helps you manage your inventory with essential inventory activities and reports. The Inventory Center stores information about all of the inventory and inventory assemblies in your company file. QuickBooks Enterprise Solutions Advanced Inventory allows you to accurately track the quantity and value of inventory items held on multiple locations. All right, manage inventory. Inventory stock status by item report. Prior to purchasing inventory, it is advisable for the buyer to generate and review an inventory stock status by item report. And we find that report in our menu reports under inventory, inventory stock status by item. When we run this report, it allows us to see what we have on hand and if we need anything or it's necessary to make adjustments. Okay, we're going to enter a purchase order. Purchase orders begin the process of ordering inventory, and we will go to our home page. and create a purchase order. We have one in, okay. I just hit the back button for a purchase order that I had created previously. What we have is the vendor. We choose the vendor to whom we would like to buy our inventory. This is all automated information based on the purchase order and the date, who our vendor is, and where it should be shipped. The item is our glass patio door, which is an item that is previously entered into the system through your add item feature. Description of the glass patio door, how many we would like to order, the rate at $19.95, and the amount, of course. Now, the purchase order, we need to receive our items through our purchase order. So when we receive the items for inventory, we refer to that purchase order through the inventory center. Okay, home, company center, inventory activities. Let's go home. Okay, here's our inventory activities. This is our inventory center. This contains all the information that we need about our inventory and any of the features and activities that we need to perform. So what we need to do, let's see here. I want to receive let's go back to our path. I don't see it. Activities, inventory, so new transactions. Okay, there it is. Inventory center, new transactions, and receive items. This was a previous item received. And who was our, I believe it was car building supply. There are open purchase orders exist for this vendor. Do you want to receive against one or more of these orders? And yes, we do. This is how we receive our inventory through our purchase order. So we say yes. And this is the purchase order, the particular information, and we'll hit OK. Now we received our information, but we began with a purchase order. So what we need to do is we need to turn this into a bill because we have to pay this. So I have this checked here, bill received. At first, what we have is an item receipt, but to turn it into a bill, you would have bill received. And then that way, consequently, we pay the bill. Let's pay the bill. Okay, let's move on. To adjust our inventory, if the actual quantity differs from the quantity in QuickBooks, we need to adjust the inventory. Prior to adjustment, a physical inventory worksheet must be reviewed. And we would do that within our reports, inventory, and your inventory worksheet. This will show us what items we have in inventory, the vendors, and how many on hand. So to make that adjustment, I'll close a couple of these windows. Oh, there's our home. We want our home. We have adjust quantity value on hand, inventory center, make our adjustment. And we want to adjust the quantity. So we have the quantity here, and we also be sure to use the account. So we have an account nomenclature, which is inventory adjustment within our income account. So what, as an income, and we have one in expense. So if we want to increase our inventory amount or decrease our inventory amount, we use income for increase, expense for decrease. And then we'll choose an item, windows, quantity on hand. We want to use a new quantity or quantity difference. So it's an income, so we'll say there's one more. And that's our total value of adjustment. Save and close. There are two reports available to manage your inventory. We have the open purchase orders detail and the review inventory valuation summary, which are in the inventory reports. Some summary and detail. Okay, moving on to Chapter 2, Day 2, Chapter 1, Special Topics. Quite a few topics we have here: non-sufficient fund checks, customer deposits, petty cash, using credit codes, downloading credit card transactions, and bank feeds. Non-sufficient checks our QuickBooks has made quite simple. It's as easy as clicking a button. So if someone writes you a bad check, you can easily handle the bounce check using the built-in feature in QuickBooks. And how we would do that is receive payments in the customer center, find the payment, and we have, who is this? This is Q, Maltese. Q, bounce the check. This payment hasn't been deposited. You must deposit the check before you can record it bounced. Okay, let's find another payment. Okay, Heather, she's the culprit. All right. Albert Cruz. Okay. Managed bounce check. The bank fee is $10. That's our bank fee. Bank service charges is the account that we record, and then the fee that we would charge him. He's a good customer, so we're just going to ask him to reimburse the amount that we had to pay. This is the bounce check summary. We will review this, just making sure that we have the invoice is correctly applied, and the fees that are deducted, and the invoice will be created for the fee for $10. Very quick, very clean, and automated by QuickBooks. And this information will reflect on the customer statement. Okay, moving on to customer deposits. When you make a customer deposit prior to creating an invoice, follow these steps. Record the deposit as a payment when you receive the money. Create an invoice when you provide the products or services, and then apply the deposit to the invoice. So we would do this. Let's receive a payment. And we received it from Heather Campbell. And we received $100. We received a check, 1, 2, 3, 4. Oh, no, we want to receive a check. And there. Save and close. You'll see here there's available credits right here, $100, but there is not an amount due connected with Heather's name. Nothing applied, discounts and credits, because there is not an invoice. So what we would do is we are not going to print a credit memo. We received a check from her through the mail. She can, through her statement, she can see the credit memo that we had received that $100 before the invoice. So we don't need to print a credit memo. So let's just hit OK. Make an invoice.